So we may be actually witnessing one of the most significant moments in financial history. Reddit users are literally taking on Wall Street hedge funds and causing them to lose billions of dollars whilst making money in the process. Let's talk about that. How's it going, guys? Ryan here and welcome back to another investing video, and today we're talking about something quite significant that is currently happening. Reddit users are literally taking on Wall Street head to head, causing hedge funds to lose billions upon billions of dollars. But before we get into that, guys, please remember to like this video. It helps me out so much with the YouTube algorithm, and subscribe for more investing and stock market content. I'd love to know your thoughts in the comments section below about what is actually going on right now with regards to Reddit versus Wall Street. So without further ado, let's get straight into the video. For those of you who aren't aware, Reddit is effectively a forum that exists on the internet, and within Reddit it has subforums known as subreddits. One of those subreddits is called WallStreetBets, and effectively WallStreetBets calls itself the following. And I quote, "Like 4chan found a Bloomberg terminal illness." No, I'm not joking, guys. That is exactly what the subreddit says, and as you can see, there are 5.7 million degenerates, which is effectively 5.7 million users who are following this subreddit. Now, basically what this forum is doing is it's found an opportunity in the form of shorting. Now, I've spoken about this concept in a few other videos, and it's effectively where you're betting against the market. So Gamestop, which is a brick and mortar video game store in the US, is effectively starting to go out of business. And as a result, lots of hedge funds are going after GME, which is the stock ticker, and effectively shorting the stock. So this basically means that they are borrowing the stock from a broker, selling it immediately, and then hoping to buy it back at a lower price and then pocketing the difference. That is effectively what shorting is in a nutshell. Now, obviously there is a downside to this in the sense of, with a traditional stock, if you buy it, then it goes down to $0 in value, then effectively that's the amount of money you've lost. When you're shorting a stock, effectively that number of loss can be infinite due to the fact that obviously if it's going up in value, that's where you're losing the money, and it could go up to an infinite number, effectively meaning you can lose more than the amount of money you've actually put into the short itself. Now, due to such a high volume of shorts on GME, WallStreetBets has realized that in fact there is an opportunity that lies here in the sense of a short squeeze. And a short squeeze is effectively where the people buying the stock drive the price up so much that the brokers call back the shorts, effectively forcing the people who have been shorting the stock and have borrowed the stock to buy that stock back immediately, driving the price up even further. Basically what this means is these hedge funds will lose significant amounts of money, and in fact in GME alone they've lost $70 billion to date. Effectively, WallStreetBets in the period of literally a week have driven the price of GME up in an absolutely insane amount. GME was pushed from $20 a share, and this was on the 25th of this month, January 2021. And then literally within a few days, the stock went north of $500 per share. That is absolutely ridiculous. And obviously these weren't the amounts that it closed at, but it's still going. It is absolutely crazy the amount that this stock has gone up. And it's because of this whole idea of short squeezing. And as I mentioned before, short squeezing is effectively the process of forcing these hedge funds to buy back their money because they are shorting GME. And obviously some hedge funds aren't exactly happy about this, and they have gone to drastic measures of trying to stop this, even though it is actually perfectly legitimate and perfectly legal. The law is on the side of WallStreetBets. But these hedge funds are effectively not happy purely due to the fact that they're losing so much money to a bunch of 20-year-olds on Reddit who have squeezed the hell out of GameStop. Now, one of the main targets of this short squeeze was a hedge fund known as Melvin Capital, who had a very, very large amount of shorts against GME. This company is worth roughly $12.5 billion. And as a result of this squeeze, they have had to have an injection of $3 billion from other organizations in order to stay afloat and be able to pay back these shorts. They believe at the moment, or are saying, that they've exited their current short position, but there are rumors which effectively indicate that this may not be the case. Now, as you can imagine, this is a bit of a David and Goliath situation in that you have retail investors, your everyday mum and dad style investors, and people who are just genuinely mucking around, making literally millions of dollars, but also potentially sending a lot of large hedge funds bankrupt. There is the possibility that this could occur because, as I said, a short squeeze means you can lose infinite amounts of money because the stock price could go up to infinite amounts. Now, obviously, GameStop itself is not a good investment due to the fact that it's a brick and mortar company. You have platforms, like Steam or PlayStation Store, where most people buy these sorts of games, which is effectively why these hedge funds were shorting GME. But here's where the controversy comes into play. A bunch of platforms which these investors from WallStreetBets were using have effectively locked down the ability to buy GME. Now, this has raised huge concerns because this is effectively platforms getting directly involved with these stocks and manipulating the market. They're only giving individuals the ability to sell these stocks. These are platforms such as Robinhood and WeBull, which are effectively free to use and effectively give people a large amount of access to get into the stock market for the first time. In fact, over half of Robinhood's users were buying GME, and just that alone is pretty ridiculous. As I mentioned before though, this really raises some decent concerns, and a lot of people are up in arms about this because effectively the way hedge funds make money is by taking advantage of the market and manipulating prices in order for their hedge fund to make a profit. And at the end of the day, retail investors are normally the people who suffer purely due to the fact that they don't have enough capital or experience to be able to stay afloat versus people or organizations of this size. Now, when it happens to these hedge funds and when it happens to companies like Melvin Capital, all of a sudden these platforms are locking down the ability to buy these stocks because these large hedge funds are hurting. And that is a huge concern because it's effectively a double standard. It's okay for these hedge funds to be able to destroy people's livelihoods, manipulate stocks, all that sort of stuff, but then as soon as you have retail investors doing it, it's a completely different standard. And as you can imagine, so many people are on the internet, they're up in arms. There has been some absolutely crazy tweets and crazy Reddit posts about this, and I implore you to go have a look, do your research, learn a lot about exactly what's going on right now, because this is going to be a huge turning point for the financial sector and the stock market sector overall. So now that these platforms such as Robinhood and WeBull are locking down stocks like GME, what are these investors or these people from WallStreetBets doing? Well, they're effectively finding other stocks to do the exact same thing. And it's turned more from a bit of a joke and a money-making opportunity to actually now something more serious, and people are really trying to prove a point due to the fact that they're unhappy that these huge organizations can get away with this market manipulation, but then as soon as the average Joe does it, the platforms clamp down, media clamps down, the US government is even involved, and the White House is monitoring the situation. This is how big this has gotten, and it's all from a single forum on Reddit, which if someone said this to you about a decade ago saying, oh, an online forum is going to be taking down hedge funds, you'd be like, that is absolutely ridiculous. But that is the situation we're currently dealing with. These average investors are banding together and effectively being able to beat these hedge funds at their own game. Now, I just wanted to share with you a few tweets of some pretty prominent people on Twitter and in the US. The first is from AOC, who says, "This is unacceptable. We need to know more about how Robinhood's decision to block retail investors from purchasing while hedge funds are freely able to trade the stock as they see fit. As a member of the Financial Services Committee, I'd support a hearing if necessary. Inquiries into freezes should not be limited solely to Robinhood. This is a serious matter. Committee investigators should examine any retail services freezing stock purchases in course of potential investigations, especially those allowing sales but freezing purchases." And yes, as I said before, you heard that right. You are able to sell the stock through this app and other apps if you do hold it, but you're unable to buy the stock. Yet you've got these hedge funds who still have the ability to trade the stock, to buy it, to sell it as they see fit. That is so unfair for retail investors, and in my opinion is something that really needs to be looked into, because it sounds quite illegal, because, well, let's be realistic, that is blatant market manipulation and effectively can be considered collusion between these apps such as Robinhood and the hedge funds. The second tweet is from a man we all know, Donald Trump Jr., who is ex-President Donald Trump's son, and he says it took less than a day for big tech, big government, and the corporate media to spring into action and begin colluding to protect their hedge fund buddies on Wall Street. This is what a rigged system looks like, folks. Robinhood, Reddit Army, GME to the moon. Donald Trump Jr. has hit the nail on the head. The second retail investors are screwing over the hedge funds, all these big corporations, the government, the media get involved because they're the ones suffering, and all of a sudden, just because it's not them doing it, therefore makes it not okay. It is a double standard, and it is something that should not be allowed. Now, going forward, what does this all actually mean? Well, I think the biggest change that we're going to see is short selling in general. Effectively, what we're seeing here is a flaw in the fact that short selling can not only destroy an individual's life, but can destroy corporations purely due to the fact that, as I said before, the amount of money you can lose is effectively limitless, because there is no measures put in place unless the broker pulls back the short or the person purchases back the share and, hands it back at a loss and cops it. That is the only point at which this can end. So as a result, what we are seeing here is potentially one of the most significant events in financial history, in the sense that one of the largest parts of the stock market sector is probably going to get quite a big change coming to it, and potentially may even get banned. That also raises a few other questions if we start looking a lot deeper into the way that these larger organizations actually invest and trade. Because you've effectively got things such as bot trading, where it's, yourself, a retail investor who is a human being with human being speed reactions, up against a computer who can literally buy or sell stocks in milliseconds. You effectively have absolutely no chance. And that's another one of the things that I genuinely consider should be looked into when we're looking at this whole stock market sector, as well as the ability for these large companies to be able to do these things that standard retail investors cannot, effectively giving them an edge. And the fact that it's okay for them to do it, but as soon as we start doing it ourselves, then it's not okay. I don't think that is really going to stand up in court. And with that, guys, I'm going to wrap up today's video. I would love to know your thoughts down in the comments section below, whether it be on WallStreetBets in general, this situation, or hedge funds and other things that they can get away with, but people like ourselves, just your standard retail investors, simply cannot. If you did enjoy today's video, please remember to leave me a like. It helps me out so much, and I really appreciate if you subscribed if you did enjoy the video as well. And with that, guys, I hope you have an awesome day. I'll see you next time. Cheers.